Let's bring on board Peter McGuire, the Chief Executive Officer at Exim Australia, joining in with us this afternoon as well. Peter, very good afternoon to you, and thank you so much for joining with us on the show. This is Winnie this side, and firstly, I just want to talk about the demand for gold. How are you seeing that? Gold prices are on the rise, given that what was happening last week globally. What should we be expecting in terms of gold demand? Is it going to be shining and glittering furthermore?
Well, Anisha, and good afternoon. I think a couple of things that we need to be very conscious of. Over the last couple of weeks, we've seen gold move really the best part of $200 an ounce from 1810 to 2010. I'm looking at the screen now. You've got about 2009.50. So it's very, very strongly bid up, and that's been curious to see how Asia was going to interpret that nearly 2,000 number this morning in Australian time, and then it's had a nice little rally to the upside since then. Silver's had a nice move up as well. So it's been a very volatile but exciting month, and we're only less than 3 weeks into it for this calendar month, and it just changes the footprint as far as risk and certainly what's going on with central banks and the banking industry.
You think it's also the fact that, people are believing that, it's very, very difficult to, try and, get it, to invest anywhere because things are getting so volatile, and that's why probably gold is seeing some amount of buying?
Well, Pankaj, I think a couple of things. First off, you've got interest rates and what's happening with central bankers globally. We saw the Eurozone last week up 50 basis points, and what's going to happen this week, probably up 25 for the Fed. And other central bankers globally all ratcheting up. So there's the first part. The second part is the US dollar's come under a fair bit of pressure. Sitting in that US dollar index, I'm looking at that around about 103.9. So it's given up a fair bit of hot air in the last week and a half as well. And you've had equity markets shaky. You've got front page of the Financial Times on the weekend. Value of global bank stocks dives 460 billion after a week of madness. Now, that was the front page of the FT. So you take on board all of that. I think that's been a catalyst or a number of catalysts that have pushed gold higher. And that's where it seems to be attracting a lot of hot money.
Right, Peter. And, obviously, let's just talk about crude as well, right? Crude has seen a fall coming in as well. So in terms of where are you seeing brokerages also cutting the targets? Like Goldman has actually cut the target to $95 per barrel versus $100 per barrel what they'd given previously. What is your view coming in the crude on the crude oil prices then?
Well, Anisha, it's been an incredible quarter. We're not through that yet. We've still got 11 days to go till the end of the quarter, and it's been tumultuous. It's been volatile. It's been whipsawing as far as energy prices. So there are probably many trains of thought. We could have seen possibly $90, and you're looking at WTI now under $65 a barrel, and I've got Brent sitting at $70.90. So at the moment, it seems to be dragging down and a drawdown as far as price. We've just got to see where we see a floor and what the general consensus is as we move into the next quarter. China looking at strong demand, what's going on globally, geopolitically. So I think it's going to be upward. When we get down a little bit further, you'll see a move to the upside, but I'm not sure when you're going to see that bottom out.
Right, Peter, thank you so much for joining in with us this afternoon, giving us an understanding on the commodities front as well. Thank you so much, Peter.